Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss the good and bad news the market is bracing for as 2020 comes to a close. And Phil, quite a year it has been. The market recovery is nothing short of remarkable from what we saw in the March lows.
Yeah, that's especially true when you look at the fact the economy itself is still not doing that well. But obviously, we keep hitting all-time highs in the stock market month after month. And when you look at the chart for the whole year, you realize it's a little bit more incremental than it sounds. We've kind of been grinding higher really since September with a couple of pullbacks as COVID spread again, as we had lack of progress on stimulus talks. So it hasn't been all good news, but it's been really quite good news since the bottoms of the market sort of late March. And obviously now we've got the vaccine being distributed and that to look forward to. I thought one of the really interesting charts, though, was looking at the breakdown of returns this year. And almost all the positive returns have been coming overnight. So between the close of the prior day and before we open in the morning, the markets are up. And then actually the intraday performance has been kind of average to flat. And it feels that way a lot of the time too. You look at the television in the morning and the markets are all showing green, and you get to the end of the day and they're not much better, or they've actually turned around on you. So a lot of the news cycle has been positive overnight and relatively negative during the day this year.
And if we take a look at our next couple of charts here, we can see where consumers are putting money to work. We know the stimulus packages have helped in certain areas of the economy.
Yeah, we've talked about it already that the retail spending is better than pre-COVID levels, that household income is actually up. But it's not true that everybody's benefited the same way. And we've shown lots of charts of the K-shaped recovery. But what's interesting is everyone talks about how positive a lot of the spending data is, and even how V-shaped the manufacturing recovery is. But it's important to remember the manufacturing has not recovered completely to the levels of pre-COVID, even though the spending has. People have been drawing down on inventories. But because of that, they haven't really increased hiring back to anywhere near the previous levels either. And perhaps one thing we're forgetting when we focus on manufacturing is that the services sector is actually far bigger than the manufacturing sector. And you can kind of see in some of the charts that look at the index performance versus the manufacturing levels. The market has actually repriced a lot of the tech companies, but actually there's not a lot of the economy that's driving, or not a lot of the production economy that's really driving the stock market either.
And Phil, this is a question that we've been trying to answer for a number of months now, that the disconnect between stock market performance versus what's happening in the real economy.
Yeah, and that's really the thing to look at. The manufacturing side of the real economy is just a small piece of it. So the gap in performance you can see in that chart, the red line's beating the blue line by a lot since about 2009. But I think that speaks more to the fact that so much of the US economy now is a services economy. And so manufacturing, whether it's increasing or not, doesn't make such a big difference to the revenues coming through the actual underlying stock market.
And then, of course, we have to talk about the Fed and its impact on the economy. People are going to start talking about inflation at some point. How much longer can rates really remain this low?
That's a good question. I mean, the Fed obviously wants to keep them low for as long as possible. And there's a point where, with so much extra debt in the system because of all the stimulus checks being written, if rates do start to increase, it's not just going to be bad for valuations, but it's also going to be a problem for government budgets. So, the loans that are going to be paid back, issuing new debt is going to have a higher interest rate. And so governments are actually going to be spending more and more of their income on paying back interest if rates start to go up. So the Fed doesn't really want rates to go up. And they've been talking about, obviously, a much more flexible policy on inflation and letting inflation get above 2% before they start to worry. But what's interesting is the multi-decade lows that we have for interest rates right now are one of the factors supporting the valuations in the market. So if you look at the fact that we're at all-time highs, obviously earnings this year are down 20-30%. So that's not the reason that stocks are at all-time highs. It's because we're expecting a recovery next year with the vaccine. We might get inflation. We might actually get a pretty good earnings boost from everybody getting back and all the pent-up savings. But also the fact that the interest rates are so low helps valuations to be higher. And historically, as interest rates go down, the discount factors that you're using to value stocks goes down, valuations go up. So I think you're right. To focus on inflation as a potential risk for later next year into the year after is something that has a lot of implications for valuations of stocks and the economy generally.
And Phil, let's wrap up with a look at our last chart regarding education. This is something that we've introduced over the past couple of months, and it really shows that the value of education when you look at longer real wealth.
Yeah, so this starts at 100 for everybody, and you can see that people with college education have actually been able to increase their wealth more than people without, high school education, and people with some high school or a little bit of college are in between. And it really does shows the value of getting a good education. It shows the importance of having a good education system for the country, for all households. But hopefully for my daughter, it shows her that she could keep working hard so that she can get into college and get a college degree, because it's much easier to have a good skill set when you're trying to compete internationally.
That is true. Well, if for nothing else, they at least know how to be Zoom experts. That's for sure.
She sure does.
And Phil, that is a wrap for us for 2020. Wishing our audience all the best in health and happiness, and we will be back guns blazing in 2021. Thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.